Hello and welcome to Property Box News. I'm Simon Everson. This week, a look at how Brexit might have an effect on the UK property market. But first, the deadline for the new HMO rules coming into force is fast approaching. As of October 1st, HMO landlords must adhere to a number of new stipulations to be fully compliant. The rules designed to protect tenants from poor living conditions include a number of important changes. The 3-floor rule is now abolished, and any household with 5 or more people from 2 or more families must be licensed. The move, which the government estimates will affect around 160,000 properties, will mean councils can take further action to crack down on the small minority of landlords renting out substandard and overcrowded homes. As well as squeezing out overcrowding, there are new minimum room sizes: 6.51 square metres for a single bedroom and 10.22 square metres for rooms occupied by 2 adults. Fines for non-compliance with HMO licensing rules are unlimited, while failure to comply with minimum bedroom sizes could see a landlord fined up to £30,000. And if you are in any doubt that you're not compliant, then click the link below and be sure to act on this swiftly. Also looming on the horizon is Brexit, and with the current state of the negotiations, some would say it's lurking like the angel of death. What it means for buying and selling and the value of property at the moment has many points of view coming through. Stats released by comparison site Net and Agent have revealed that in areas where the majority voted leave, they remain confident when it comes to putting their properties on the market. Hull, where 65% of people voted to leave, is witnessing 28% above the national average of properties going to valuation. Meanwhile, Bradford, 54% leave, is 20% up on the average. By comparison, remains stronghold Bristol, which voted by 62 to 38% to stay in the EU, is at the bottom of Net and Agent's confidence index, some 44% less likely to list than the national average. Manchester, 60% Remain voters, is down 12%, and Brighton 69%, down 4% on the national listing index average. If there is no deal in place next year, data shows from a survey of over 1,000 Britons that 44% of people think there will be no change in house prices come Brexit. 31% say prices will fall, and only 25% think house prices will rise after March 29th next year. This from propertyroad.co.uk in conjunction with the survey company Populus. There were also clear differences between the older and younger generations, with only 20% of people aged over 35 predicting property prices would rise after a no-deal Brexit, as opposed to 37% of those aged under 35. However, the differences in outlook between men and women were not as clear-cut, with the findings suggesting that women are taking a more optimistic look at the consequences of a no-deal Brexit on property prices. It doesn't appear that there is a single viewpoint that's dominating all others, as the results are fairly well split, said Paul James, owner of propertyroad.co.uk, who commissioned the survey. He went on to say that's perhaps an indication of the confusion felt by many as to exactly what a no-deal Brexit would actually mean for the country. Landlords and investors have a different set of opinions. Many believe that Brexit will have little effect on supply and demand. If anything, it will reduce the supply and therefore increase demand, because there may be a slowdown in the building of new property post-Brexit. The UK's construction industry may have a sudden reduction in labour from the A8 countries, as well as Croatia, Romania and Bulgaria. Since 2004, the industry has relied heavily on labour from all of these countries, without which it would be forced to slow down new construction. In another point of view, Paresh Raja, CEO of Market Financial Solutions, says historically real estate has proven itself to be a safe and secure asset by offering stable long-term returns. As a result, demand for property remains high. Recent figures revealed that the average house prices in the UK rose by 3% in the 12 months to June 2018. Mario Berti, CEO of Octopus Property, agrees, and also highlighted the supply-demand imbalance as well as cheaper lending that will keep investors involved. This positive sentiment is reflected by James Bloom, Managing Director of Short-Term Lending at Masthaven, who comments that while the UK has suffered a housing slowdown, with many investors choosing to hold on until market conditions become more clearer after Brexit, the market continues to be upbeat. Now, we'd like to hear what you think. After Brexit, where do you see the market going? Will house prices slump? as the media headlines seem to be saying, or will there be little change? So leave us a comment down below. That's all from me this week. Don't forget to share, subscribe and like. I'll see you next time. Goodbye. Brexit. The UK's construction industry. What's an industry?